In this video, we will learn about configuring the common options for payables and procurement. This is one of the main tasks required to configure or implement payables. For this setup, the prerequisite is to implement the common financial configurations such as chart of accounts, calendar, currency, ledger, and reference datasets. So as a part of this configuration, we will define some of the default values which are primarily used for that accounting information. And the main advantage for this setup is it reduces the data entry when we are entering the transactions in Oracle. So to proceed with the setup, I will navigate to the search task page. So I will click on my user link and then the setup and maintenance. So here I will search for the tasks starting with common option. The full task name is manage common options for payables and procurement. We can also look for this task from the implementation project, or we can use it from the search task screen as well. One thing which we need to ensure is we have to select our business unit in the scope. So for this, I'm doing the configuration for Urban Consulting that is already selected, so I can proceed with the task. So the common options are grouped into the following categories. Those are default distributions, automatic offsets, currency conversion, expense accruals, self-billed invoices, legal entity information, and some other additional information on this page. So for default distributions, Payable uses this distribution defined in this common options for payables and procurement, and the following account combinations will be used unless specified at the lower level of the setup. So any configuration for that account perspective which is defined at the lowest level, that will override the one at the level above. For liability, prepayment, and bills payable, we can define this information under supplier site assignment as well. So if it is not defined at supplier site assignment, the invoice will take it up from the manage common options for payables and procurement. So to start with configuration, we will first go ahead and enter that information for the liability account. And this account information we can use from the accounts, the natural accounts which we define. So that is our chart of account structure. So if we look at this, the details of accounts which we have defined, we have the company as the first code, then the department, account, payable we are using for the liability, line of service, intercompany, future 1, future 2. So all these segments you can define. So liability account is the default liability distribution for an invoice. And then now we'll go ahead with the prepayment one. So we can copy most of the structural information. We can just update that account. So in real-time implementation, you will have the list of account codes defined as per your discussion with your client from your the client's representatives from the finance or accounting team. So that is our prepayment account. Bills payable, I'm just taking same as a liability one. And then we have the conversion rate variance gain and loss account. So that is basically the conversion rate variance gain and losses for inventory items or expenses which are accrued on receipt. So any variance which is calculated between the invoice and the PO or the receipt, depending on how you are doing the matching within the payables, you can enter the variance information, can go into these accounts. So I'm updating that account for variance over here. After defining the variance, we are going to discount taken. So discount taken on payments will go over here. So we can use rest of the segment same and can provide the account for discounts. So some of that accounts, as you can see, they are not mandatory, like the one which are marked with asterisk. They are the accounts you need to define, like liability, prepayment, conversion, gain loss accounts, and discount taken. So miscellaneous, freight, bill payables, and the others, they are optional. So miscellaneous is again that if you define the miscellaneous account, it will pick it up from there. Otherwise, any miscellaneous charges would be prorated against the invoice lines. So all this account information I'm referring to the sheet which we used for our rapid implementation. So that's the freight account. It's on the same principle. If you define, it will use this account. Otherwise, that amount will be prorated against the invoice lines. So similarly, you can define the prepayment tax difference and the retainage account details as well. So yeah, now moving on to the automatic offsets. So automatic offsets the payables automatically creates balancing accounting entries for your transaction. If you have selected for automatic offset, it depends upon which option you have selected, whether it is for primary balancing segment or for all segments. So right now we are just keeping it to none. Otherwise, you can select the relevant option, whether it is a primary balancing segment or all segments. So once we are done with defining the default distributions and automatic offset options, we can go ahead and select the options related to currency conversion. So currency conversion is applicable for invoices. This option will not impact your payments. So if you have that currency conversion or the foreign currency invoices are involved, you can select the required conversion rate entry, conversion rate type. You can select as a corporate, and then we can provide the or some other rate type, and then you can proceed with the providing the distribution accounts. So just as an example, I'm going to take the account from variance, and then you have to select that option for expense accruals. So expense accruals, regarding that accrual of expense items, we have two options, one at receipt and another at the period end. So at receipt is basically during receiving, accrual entries are created, though you can override these entries later as well during purchase order scheduling, or you can select that period end. Period end is during period close, accrual entries are created for receipts that do not have invoices. So accordingly, you can select either of the values. So I'm keeping on at receipt. Then we have option for self-billed invoices. We have two options over here. One is the gapless invoice numbering. We can select the gapless invoice numbering if we do not intend to have the gaps, and if there are any company specific numbering information, we can put that buying company identifier information here as well. So self-billed invoices, they are primarily used for like the evaluated receipt settlement, also known as ERS invoices, that are automatically created by pay on receipt process in receivables. And then debit memos, they are also part of this, and invoices that create from the consignment agreements using pay on use option, they also fall under self-billed invoices category. And then we can go ahead and select the legal entity information. So legal entity information is primarily related to for the tax calculation and the legal reporting. So all that VAT details you can select over here, and you can also select the bill to location. So this is the default bill to location for the purchase order if bill to location is not already specified on the supplier side assignment. So once you are done with defining and selecting all these options, you can save and close.